What's going on? It's Dan Tactics back again with another video. In today's video, we're going to be talking about one of our building blocks that I use on a daily basis. We're going to be talking about the fair value gap. Before we get into the video really quickly, I do want to apologize for my face cam, bro. The way my computer is set up, like this face cam isn't terrible. It's just the way, bro, I got to get lighting. So I'm going to get that fixed, hopefully by the next video. But I know you guys don't care. I know you guys are here for the fair value gaps. So the first thing I want to talk about before I show you anything on the charts is really why we use fair value gaps in the first place. And the reason that we use fair value gaps in the first place is as a retracement tool. And then we're going to talk about how to spot them. And anyways, we use them as a retracement tool. We don't want to use a fair value gap on its own, and I'll show an example of that and why you don't want to use it on its own. I even used a fair value gap today. But we're not going to talk about the one I used today. I'm just going to go over here. And there's a difference in fair value gaps and how they get respected between different time frames. So a lot of the time, I'm going to show a perfect example right here. This is yesterday. I was not trading SPY yesterday. I did have some points marked out, but obviously we didn't sweep any liquidity here. We did sweep liquidity here, but I already took my trade on NQ. Besides that point, let's take it down to the 5-minute time frame really quickly. And then let's go back to this is yesterday. Okay. So a fair value gap is essentially a three candlestick war. So let's just pick out 3 candlesticks randomly. I'm gonna go this right here. Is there any fair value gap here? No. There's no fair value gap. The reason there's no fair value gap is because when I'm gonna show you a fair value gap, there's one right here. Perfect, beautiful. This is on a 5-minute time frame. This is a 3 candlestick war. We had a impulsive move to the upside. So between this wick and this wick, you see how I put it not at the body of the candle, but I put it at the wick. And then if you guys aren't familiar with wicks and bodies, you shouldn't be watching this video. But anyways, price retraced back into this fair value gap. Literally, you could have even used equilibrium at this point, where you would have marked out the previous low to the high. And you can see it almost it added up with the equilibrium. You don't necessarily want to take a trade off that because it never really swept liquidity. But a lot of the times what I use fair value gaps and how I use them, I'm going to go over them. But right now I just want to go over how to spot them. That's essentially the point of the video and what they are. So it's essentially the imbalance. And if you take a look, this whole thing, this is a fair value gap. This is a fair value gap. This is a fair value gap. You don't want to worry. When you see stuff like that, just take it up to a higher time frame. Mark it up. That's an hourly fair value gap. When price eventually crossed back into that hourly fair value gap, we had a rejection back up to the upside. When this fair value gap was traced back into on the 5-minute time frame, we had a rejection back up we rallied back up to the upside. Now, as you see, there's another one right here. So even like this, even though this is a pretty insignificant candle, it's not a strong candle, it's a doji candle, with the 3 candlestick pattern, and then you don't want to trade off candlestick patterns ever. It's just the reason I'm talking about fair value gaps is how to spot them, and essentially, like I said, it's a 3 candlestick war. So we had price trace back into it. It closed above, it had extra confirmation that it's going to go above these highs. Essentially, people probably use this as a confirmation when they were trading yesterday. And now I want to show you a lot of mistakes I made when I first started trading. I haven't been trading for too long, but a lot of the times I have made mistakes with fair value gaps before where I've taken a trade and it wasn't really a fair value gap. So, I guess this would be a good example. So, as you see here, this green candle, it has from wick to wick. But you see, that's not a fair value gap. You know why? Because technically this wick overlaps this wick. No imbalance. There's no imbalance. There's no liquidity void. And essentially all a fair value gap is just a giant liquidity void. And let's take it to the next day. Because these fair value gaps show every single day. And And another thing with fair value gaps, I want to show you why you don't want to trade with just a fair value gap as a confluence itself. Because, see, this is a pretty major fair value gap right here. Anybody could agree this is a pretty major fair value gap. Price came back into it, and it brushed all the way through. A lot of people like inverse fair value gaps. I have taken a trade before off an inverse fair value gap. This one actually literally ended up being an inverse fair value gap. This is like a great example of an inverse fair value gap. But a lot of the times with fair value gaps, if I see price rally all the way through it, you know what I'm going to do? I'm going to hit this. I'm going to hit the gap, or I'm going to hit the box, where however you guys want to mark out your fair value, I'm just going to delete it. I don't really pay attention too much to inverse fair value gaps. I'm not the biggest fan of them. Just off my trading strategy. I mean, there's nothing wrong with them. This one would have ended up playing out. It even came back into it again and played out. But a lot of reasons, like I want to show you guys with fair value gaps, is I like using them as retracement tools and retracement tools only. So right here, we didn't really sweep anything. I mean, I guess we were filling this. I just kind of want to see where I would have ended up trading first, and then I'm going to show you how you could have used a fair value gap. All right, this is perfect. We sweep pre-market lows here. This is last Wednesday. We ended up sweeping pre-market lows, correct? Look at this. We sweep pre-market lows. This whole final move down, this is going to be your order block. We're going to talk about this later, but not today. Don't even know why I mentioned it. Anyways, we got a pretty big fair value gap here on the 5-minute time frame, and we also get another fair value gap here on the 5-minute time frame. So what you want to do in a big move like this, you're gonna honestly want to scale up a little bit. And then perfect. We scaled up. We took it to the 15-minute time frame now. We still see on a 3-minute on the 3 candlestick war, we get this fair value gap. Price traces back into this fair value gap. So let's take it back down to the 5-minute now. Make sure we're on the 16th. It's all the way over here. God damn it. Come on. Okay. So this is your 15-minute fair value gap. Could have also used equilibrium here from the low to the high. This was your 50% point. So you're buying the fair value gap is within your discount. It's extra confirmation off a liquidity sweep. I would have entered my position. This is literally a trade that I would have took. We swapped liquidity. We had a reaction off of it that created a fair value gap on a high time frame, at least on a 5 or 15-minute time frame. Price came back into this fair value gap, and you could have taken your entry, setting your stop loss. A lot of the times, if you're taking the trade off the fair value gap, you can set your stop loss right below it if you really trust that fair value gap. But since I'm still a little bit new, I've been setting my stop loss right below the lows of the liquidity sweep. And then for this trade, you would have targeted, we're not going to get into this too much, but you could have just targeted any of these highs, and obviously, literally, you could have went all the way up here to 1 to 2 with a very large stop loss, and that would have ended up hitting. So that's one way you could use a fair value gap. That's the way I use them. I think the best way to use them is fully as a retracement tool and waiting for price to come back into a certain point, and then making your entry off of it, like liquidity sweep plus an imbalance. That's literally the perfect way to trade. Even let's just go show another example, bro, because I like getting this practice myself. All right, perfect. We didn't sweep this trade. We never swept. Never swept the previous day's highs, but we did end up having a drastic move where we ended up breaking structure. See, the thing is, this got overlined by a gap. This never really got filled. But there was multiple fair value gaps developed. If you put this on a higher time frame, once again, this is a little bit worse than the last example, but I mean, when you're trading, it's not going to be you're not going to get the prettiest thing every day. So literally this whole thing is honestly an imbalance on the 15-minute time frame. I know I said a 3 candlestick war, but this whole thing is just an imbalance. There's a fair value gap here, fair value gap here. You would have wanted for price to retrace back into this point. See, it did retrace back into the point later on that Wednesday, but this trade you would have maybe entered off something like an order block, or maybe just off the liquidity sweep plus to break a structure, because we literally had liquidity get swept. We broke structure right here on this candle. You could have entered after the close. That would have been perfect. Let's take it to the next day. I'm going to take it back down to a lower time frame a little bit. Even on something like, I'm trying to find something. See, I'm not like too great at seeing the market yet. Like still, I really like that first example I showed. I just want to find something like similar, you know. Okay. This is kind of an example of like when a fair value gap kind of formed. I'm looking up here. So we swept liquidity about at like halfway through the day. Came up, swept liquidity, and then we created multiple fair value gaps on a time frame. I'm just going to use this one as an example. Fair value gap right here, 3 candlestick war. This is on a 5-minute time frame. Price trace back into it. You could have used this as your entry. The only thing I'm not like the biggest fan of this trade, I love order blocks. I would have actually placed my entry price where it came back in. Ended up filling. Didn't fill this fair value gap. And then we never had a fair value gap on this one either. So we had a fair value gap right here. Never ended up filling it, but we ended up having an order block where price came back into. I would have had my entry right there. Anyways, would have even been extra confirmation when a fair value gap to the downside was developed, because price retraced back into it and then obviously rejected back down. And then even hit these lows all the way down here that you could have had your take profit set to. Okay. Let's keep going. I like doing this, bro, because it helps me, bro, on a daily basis. Like I've wanted to do this. This is like another fair value gap, pre-market fair value gap. Price came back into it, respected it, went back down to the downside. But a lot of the times, for like extra confirmation, you don't really want to use that fair value gap right by itself, because I could find so many examples of just a fair value gap by itself that just got completely disrespected, especially if I take it down to like a lower time frame. If I'm on a minute scale and I'm just hitting a trade-off every single fair value gap, bro, I'm going to be losing money. You're not going to be profitable. And I have literally, like when I was a complete noob, I was taking trades like this. Now let me find one where it didn't get respected. All right, literally this is perfect. Fair value gap right here. There's 3 candlestick war. Dude, that got respected, bro. I'm gonna be honest. Yeah, that went back up above that high. That got respected. I don't know what I was looking at. Okay, right here. That's not a fair. See, this is a perfect example. See, I just showed you guys an example. Right now, I'm gonna go over literally a fair value gap that isn't a fair value gap that I literally just got tricked on. This is not a fair value gap. I mean, it is. It's like a very tiny one technically, but no. It's on a minute time frame. Absolutely disrespected. I need to run to the bathroom really quickly. Holy. All right. I totally just blew up the whole toilet, but I'm gonna be honest, boys. Like, there really isn't much else to talk about with fair value gaps. Like, I mean, we kind of got like the whole gist like out of the way. Like, okay, we're just now scrolling mindlessly on a 1-minute time frame. All right. One thing I do want to talk about is higher time frame fair value gaps. I guess that's like one other thing I wanted to. Where's my chart, bro? Where am I? Okay. That's what I say, bro. Like, where all the numbers go. High time frame fair value gaps. I love them. They're great. It's like absolutely. This is like one way that you could trade fair value gaps. Okay. I mean, I guess this is literally a perfect example of a fair value gap. But it's right off a gap, so I wouldn't even consider that. Price is always going to want to come back into it. Right here, it got disrespected. That's a fair value gap. Green, red, red. Yep, that's a fair value gap. Woo! Alright, completely disrespected. Oh my god, dude. I'm like sick. My eyes are watering. Price got completely disrespected. That didn't work. But a lot of the times of higher time frame fair value gaps, like right now, oh my god, dude, it's even like perfect. Like I might even be taking a look at this for like the next couple days. We have this, bro. If we take this like a 3 hour time frame, bro, I want to show you guys something. This could be a massive fair value gap. But like on a 3 hour time frame right here, bro, check this out. Check this out. Check this out. When this fair value gap was getting filled the other day, bam, bro. Bam, bro. Like that could literally change a fair value gap on a high time frame could literally be your whole daily bias for the day. That imbalance getting filled. Like for example, something like this. Disrespected. Absolutely disrespected. That's why I don't like that's why I'm like not the biggest fans of them doing it myself. But now let's take a look. Let's use it as a retracement tool on a higher time frame. So let's go out. Just see like sometimes they haven't been filled. Let's see. Let's take a look somewhere where we swept something somewhere. I know I like there's probably like a million examples of it working. I just kind of want like something major, bro. Literally look at this. Okay. Blah blah blah. Price retraced back in at one point in the 3 hours. It was all the way down here. Ended up filling this gap. Off that gap, we had price react, create this fair value gap. Price retraced back into that fair value gap. What can you expect to happen? The only thing that like I don't really like about this trade is let's see where that equilibrium really sits. It sits within that fair value gap, but it sits a lot lower. So like I kind of would have expected a retracement a little bit lower. But anyways, this shows an example of a fair value gap getting respected. Then you got another one right here. This is more, I think this got respected as an inverse. Not even, just completely ran through like Sophie ran, bro. Like so. Anyways, bro, it doesn't even matter. So yeah, I'm gonna get back to my trading. I hope you guys actually learned some useful information from this video. I know that I definitely needed to practice a little bit myself, taking a look at fair value gaps on a higher time frame and taking a look at fair value gaps on a lower time frame, seeing how to spot them in the market, seeing how to use a fair value gap as a retracement tool. Other videos I'm gonna be making are about like my other building blocks, so it's gonna be like a whole series, like kind of like another one. I know I got my journey to profit, and then I got my, which I've been really, I'm getting really excited to drop my October like trade recap, like my full month's trade recap. I'm gonna make it probably like a 45-minute long video, and I'm just gonna use that as a complete learning experience. But other than that, bro, I hope you guys enjoy this video, and I'll see you guys on the next one.